Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Aris Mining.
Is gold breaking out? This is Paul Harris of Kitco Mining at Resourcing Tomorrow in London. And today I'm joined by David Awram, co-founder and director of Sandstorm Gold. David, welcome to Kitco.
Thank you very much. I'm very glad to be here.
It's been a while since we last spoke, David, so I'm looking forward to sort of catching up with you. Now, let's start off with a sort of general question about the royalty and streaming space. How do you think it's developed this year? What have been some of the sort of key moments?
Yeah, I think over the last little bit, there's been consolidation in the space. I think there's been a little bit of separation between the mid-tier and larger companies and the smaller companies in there. Less and less royalty companies are emerging compared to years ago. And the reason is, I think, because there's still, like the rest of the space, there's a struggle to get capital. The big companies have great income. They're making a lot of money, especially as we see these higher and higher gold prices. But they're also being, I think, very disciplined in the deals that they're looking at and what they're trying to buy deals on.
In terms of the consolidation, is the consolidation wave done, or do you think that more is necessary? Is there more to come?
There may be a little bit more to come, I think, in the future. We spend a lot of time thinking about it. Sandstorm itself we've done 5 consolidations up for existing mining royalty companies already. So we've really are on the leading track of that. So we spend a lot of time thinking about what the next move in consolidation is going to be.
And anything in the future of Sandstorm to continue that path?
2022 was a big year for us. We consolidated and bought 2 other companies, 4 and 5 in the portfolio. So now we're spending some period to digest, really kind of have those projects come in. When we bought those deals, we bought a lot of long-term, really high-quality mines in production, but we did have to bring some debt on for that. So we're focused on really paying that debt down and hopefully seeing our valuations improve once we see that debt beginning to reduce in a really significant way.
Okay, well, gold seems to be breaking out above $2,000 per ounce. Meanwhile, the copper prices remained flat for much of 2023. Is this a particularly fertile time for deal making for the royalty and streaming companies?
Yeah, it's a really interesting space. It's my pleasure to actually be at a mining conference with the gold price breaking out as opposed to the opposite way, which it feels like it almost always does. But for us, for royalty companies, particularly with a lower copper price, it feels like it should be a great time to really provide capital to what is a capital-starved industry, which I'm really kind of completing and putting the entire copper industry together. So I think for us, it provides that great opportunity to look for those bigger deals, those bigger transactions, because there really is a need for copper companies to get capital into their projects.
Well, one of the trends in the copper space specifically is the increase in the capital cost of building a new mine. We're talking, let's say, basic starting price of $1 billion going up to 5 or 10, depending on the scale of the project. I imagine that makes a lot of mining company boards and senior executives very hesitant or reticent to greenlight new investment decisions because the capital risk is so much higher. Does that create more opportunity for royalty companies to come in and, let's say, share the capital load with companies?
Yeah, I really do think it does. I think the industry as a whole is looking to be a lot more collaborative, looking to new partners and different groups. I really envision, I see a period coming up where we're really looking at more sharing at the asset level in these projects and finding multiple partners coming back in. Already, we're starting to see groups like the Japanese industrial houses really ramping up their efforts to become more partners in these projects, and even new players out of the Middle East that are looking to emerge and partner in some of the bigger development projects that are coming down the line.
One of the other collaborative aspects of the royalty and streaming model or industry, if you like, which I don't think gets a lot of attention, is the support you provide to the businesses you invest in that go beyond just writing a check. And here I'm thinking of, you've obviously got technical capability, financing capability or financial markets capability, and of course at the asset level with communities. A lot of the bigger companies specifically go way beyond just writing a check.
Yeah, I think the advantage of being a royalty and streaming company is that you just see a tremendous amount of in-depth knowledge at the asset level. You see a lot of projects, you see what works, what doesn't work, where people are having successes. So we always really put that out and let our partners try to know that we're there to really kind of help out. Also, another big trend has been to help out with the existing ESG programs, to really piggyback, provide financing and funding to them. And so that's something that I think we as an industry are really happy to do. And we in Sandstorm are particularly very happy to work on what end up being really worthy ESG projects and community support projects.
Now, making the CEOs of the companies you invest in aware of the potential help you can provide is one thing, but do you ever get into the situations where you want to offer help when it hasn't been requested? Maybe a little bit of backseat driving?
Yeah, we tend to avoid that as a rule. Sometimes we really do have to try and interject. Most of the times it really is more of a proactive. Companies often do recognize that they do need some help and some effort in really trying to make the next thing work on their project. We're more than happy to really figure out what needs to be done and how we can be of help to them.
Now, one group of companies specifically that perhaps need a lot of help and support at the moment are the juniors. The junior equity prices have been in the doldrums for 2, 3, 4 years even, and I imagine a lot of them now are really, really desperate for cash. So I imagine you're inundated by financing opportunities and perhaps have the luxury problem of having too much potential business to do. How do you pass through all of that and determine where to deploy your scarce capital?
Yeah, it's a real disaster what's happening in the junior mining space. I think over the last 10 years, it feels like we've had at least 3 points where we didn't think the market could get any lower, and it continues to go lower. And it continues to get more and more difficult to access capital for those junior companies. So the challenge with them is really kind of doing a deal with them and then figuring out how that follow-on capital comes in. That's still, I think, something that the industry as a whole is trying to go. Hopefully we get out of this and there is a bigger injection of capital and the regular streams of equity can really flow back into what I think a lot of very high quality exploration projects that are out there.
One of the things I've sort of picked up on this year is that some of the royalty streaming companies are going beyond, let's say, the traditional financing package or their traditional financing package and offering almost like a whole financing package. They're providing obviously royalty and stream finance, but also debt finance and equity finance, presumably because there's a scarcity of finance available for developers. And
we're really the first royalty and streaming company that started to do that. We started providing not just a royalty and stream, but also some convertible debt and equity into it because we wanted to really become a full package to really provide something that from one source, which really provides that financing solution. So I think that's a great trend to see continue on. I hope more of the companies employ that because it's something that I think the companies really need in this period where finding equity investors, the real lack of participation by the banks on the debt side is really more prevalent now than it ever has been before.
Well, one thing I hear from people in the banking sector is, they're quite willing to write checks, but they can't because their borrower cannot raise the equity.
Yeah, that's exactly it. And we're seeing that too. As we look and participate in different projects, there really is a lack of willingness and participation on that debt side.
Okay, let's talk a bit more specifically about Sandstorm Gold now, if we may, David. How happy are you with the company's performance this year?
Yeah, listen, we've had a very healthy gold price increasing over the year. Our performance has been effectively records every quarter, and this will be the largest and highest production year that we've had. So we're really pleased about where we've been. 2022 was a big year for us. We made a lot of acquisitions, and it's nice to see that long-term cash flow coming together. We're great. We're happy with that portfolio, and we're really pleased to see the next years to come.
Now, you mentioned earlier about the debt and how you're focused on paying that down. Where are you in that, and what can we expect to see, or how much can we expect to see that come down next year?
Yeah, certainly. We've gotten that clear feedback from investors that we will really need to pay down our debt. We took a total of $637 million of debt when we made those acquisitions and really paying for some of those transactions. We've taken that down to $443 million, but we're really focused now to pay that down. So for us, that's really the mandate in the near future and over the next year is to pay quarter over quarter pay more and more of that debt down. With higher and higher gold prices, it makes it that much easier because we're starting to see margins up to $1,800 per ounce on our overall production.
Okay. Now, you mentioned you're very happy that you've been getting sort of record quarters successively through this year. Is there anything you're not happy with the company's performance? And if so, how will we seek to remedy that?
Yeah, I think a lot of it comes back to that debt. I think we're trading at a lower valuation relative to our mid-tier and senior royalty and streaming company peers. But a big part of that, I think, really amounts to that debt level for us. So for us, we want to avoid any kind of further dilution, but we do want to use as much cash flow as we possibly can to pay down that debt. We're really hoping that that's going to help open up the eyes. We've had a lot of success in really building, as we built the company, is getting many more of those larger institutional investors in us. We're really setting ourselves up so that when those generalists come in, we become that ideal small to mid-cap sized royalty and streaming company to be the go-to investment.
Has the level of debt mean or tied your hands in some respects in your ability to transact? You've perhaps seen something attractive, but because of the debt load, you've had to pull back.
Yeah, certainly you do have to make sure that you're monitoring your cash outlays. If you're paying down debt, you can't really do both of those, $100 million size deals and pay down debt at the time. But we're really happy with the portfolio. The beauty of the acquisitions that they gave us is that we have a huge growth profile going out into 2029, and then we anticipate that growth to be sustainable for many, many years after that.
Sandstorm is a company that's been characterized by doing things differently to other companies in the space, doing different deals, doing things in a different way. It's not your typical standard royalty streaming company. Looking back, has that been a successful strategy for you? Are you happy with that? And is that a strategy that will continue going forward?
We've always seen ourselves as a company that wants to take advantage of any good opportunities in the mining space that present it to ourselves. So we're always looking for that great opportunity, and it may be a non-conforming way of obtaining that opportunity. I'm really happy with what we've done in the past. I think it really helps demonstrate our entrepreneurial feel and our ability to be willing to go outside of really the normal bounds of what a royalty and streaming company should be expected to do, and then eventually to drive it. The great thing about maturing the company where it is right now, we've created partners along the way where we can still chase after those non-conforming opportunities, but in the end up with a perfectly standard royalty or stream retained within Sandstorm. That's the beauty of creating some scale up and participating in this industry for as many years as we have.
We're almost at the end of 2023. 2024 is just around the corner. What are some of the catalysts we can expect to see from Sandstorm Gold Royalties next year?
Yeah, of that existing bought and paid for portfolio that we have right now, we have a tremendous amount of new projects coming on next year, and really big world-class projects. Greenstone by Equinox Gold is really one of them. Platte Reef, the phase one of Platte Reef, is expected to begin in the second half of 2024 as well too. Beyond that, we see projects like SSR's Hod Maden project really getting into that full construction mode. And then also coming in the coming years is the Robertson project, which is part of that whole Cortez trend by Nevada Gold Mines.
Excellent. Well, David, thank you very much for joining us today.
Thank you so much. A real pleasure to be here.
And this is Paul Harris for Kitco Mining at Resourcing Tomorrow in London. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Aris Mining.